Welcome to today's market report. European stock markets are seen opening lower on Wednesday on worries about the damage to the region's economies caused by a second wave of shutdowns to combat the surge in COVID-19 cases. DAX futures contract in Germany traded 0.3% lower, CAC 40 dropped 1.4%, FTSE 100 fell 0.8%. Europe continues to be hit hard with the second wave of the virus, with many of the region's countries reporting soaring infection rates, not helped by the onset of cold, damp winter weather. Restrictions imposed to try and combat the pandemic have had a limited effect to date, prompting fears of more draconian measures. French President Emmanuel Macron is set to give a televised address Wednesday evening, with local media reporting that the government is considering imposing a lockdown from midnight on Thursday. Similarly, the Belgian government will convene on Friday to decide on a potential new national lockdown, while Spain has already announced a state of emergency for 6 months. In corporate news, Deutsche Bank will be in focus after the troubled bank returned to quarterly profit, helped by a strong performance from its investment banking arm. Additionally, Reuters reported that US jeweler Tiffany and French luxury goods giant LVMH are in talks to settle their dispute over a $16 billion takeover at a price slightly lower than that initially agreed. Oil prices slumped Wednesday as a jump in US crude stocks, coupled with the potential damage to demand from the incessant increase in COVID-19 cases, raised worries about a supply glut. Data from the American Petroleum Institute late Tuesday showed a build of 4.577 million barrels for the week ending 23rd of October, more than the 1.2 million barrels expected. Oil has rallied on Tuesday, with the Brent contract climbed nearly 2% and the WTI version 2.6% after a significant portion of US Gulf output was shuttered ahead of the arrival of Hurricane Zeta. Crude futures traded 2.6% lower at $38.55 a barrel. Brent fell 1.6% to $40.95 per barrel. Gold futures fell 0.2% to $1,908.05 per ounce. On the FX front, GBP/USD looks to extend its downside consolidation phase below 130.50 into the European Open, as the US dollar clings onto the overnight gains amid broad risk aversion. The risk of mood buoyed the demand for the US dollar as a safe haven at the expense of the risk assets such as British pound. The UK virus situation is no better, with the kingdom having reported that the highest number of new deaths since May at 367 on Tuesday, while new infections rose by 22,885. The Northern English town of Warrington moved into the highest level of coronavirus restrictions since Tuesday. On the Brexit front, the EU's chief negotiator Michel Barnier resumed talks with his British counterpart David Frost in London on Tuesday. Markets remain hopeful of a likely Brexit breakthrough, keeping the cable's downside in check. In absence of first-tier macro events from the UK docket, the focus will remain on the global virus statistics, Brexit updates and the US data for fresh trading impetus. Eurodollar continues to drop as Eurozone's biggest economies, France and Germany, consider imposing the economically painful lockdown restrictions to counter the rising coronavirus cases. The pair is currently trading at 117.78, representing a 0.13% drop on the day, having hit an 8-day low of 117.69 early on Wednesday. The currency pair is trading in the red for the third straight day, having faced rejection near 118.60 on Monday. While the lockdown measures took by the countries look less severe than the ones implemented in April and May, they could still harm Eurozone's already fragile economic recovery, resulting in a prolonged period of deflation. All things considered, the pressure on the European Central Bank to deliver more stimulus looks to be rising. As such, markets are offering euros. The sell-off will gather pace if the coronavirus numbers continue to rise. In opinion of UOB Group, Euro-dollar is now seen within the 117.10 to 118.60 range in the next weeks. The dollar pushed higher in early European trading on Wednesday, with traders turning away from riskier currencies given the current uncertainty surrounding the coronavirus pandemic as the US presidential election draws near. The dollar index was up 0.2% at 93.138. Dollar yen was at 104.19. Trading ranges are becoming more limited as growing worriness about the US presidential election is starting to limit large currency movements. This is today's market news. Thanks for listening. We'll see you next time.